So in this video, I'm going to take you through the autumn statement for 2022. This is effectively a budget, a mini budget. I know we've had a few of these, but this is the latest one from the current Chancellor Jeremy Hunt and the new Prime Minister Rishi Sunak. This is their kind of plans of how they are going to fix the economy. And let's not forget that a lot of those problems were caused by the people before them, Liz Truss and Kwasi Kwarteng, and they were obviously part of that as well. But anyway, I'm not going to go into the politics of this. I'm going to just take you through the key announcements and what that means for your money now and in the future. And let's start off with something that's probably a big concern for all of us, right? And that is energy bills. What's going to happen there? Now, this is obviously, you might be forgiven, and you will be forgiven for getting a bit confused because there have been so many twists and turns and changes on this. Back in September, Liz Truss announced the energy price guarantee, which was a freeze on energy prices for 2 years. And the average rate there was set at £2,500. Now, it's important just to rewind slightly here and just remind you here that this is about the price cap, that freeze is on the per unit energy cost. And if you multiply that out, the individual cost, by the average energy use of a household, you would get that £2,500 figure. Obviously, if you're someone who uses a lot of energy for whatever reason, maybe you just use a lot of it, you're at home a lot, or maybe you've got a big house or whatever it might be, or badly insulated home, then you use more energy than average, gas and electricity, then your bill will be higher than that £2,500. And obviously the opposite is true. If you use less, you have a smaller home or you're not in much, whatever it might be, and you use less than average, your bill would be lower. So when we talk about these numbers, and I'll carry on talking about some numbers now, I'm talking about the average use, okay, the average household use. Anyway, that was set for 2 years, and very quickly, with the new people in charge, they changed. They said, no, actually, do you know what? We are not going to have this fixed for 2 years. It is too expensive. So what was going to happen to that? We don't know. They said that would end, that figure of £2,500 for a year would end in April of next year, of 2023. We now know what will replace it. And it is not reverting back to the old system of an energy price cap moving every 3 or 6 months. It's actually the energy price guarantee, this price freeze on the cap. But this is going to actually move up, and it's going to last for just 12 months. Okay, so the new figure from April next year, the average figure, remember, could be up or down depending on your usage, will be £3,000. And that will start in April 2023 and last for 12 months. So that on the surface looks like a £500 increase, doesn't it? But it's actually bigger than that. Because what we've got right now started in October and it will run until March. We've currently got that 67 quid a month knocked off our bills, totaling £400. So when you take that into account and the new price that we're going to be paying, that's actually a 42% increase on your current bills, okay? So if your bills already are thinking, blimey, these are high, because remember, they've jumped up a lot, even with that £67 payment. They're still a lot more than they were a few months ago, a year ago, whatever it might be. They're going to go up even more again. So you have to be prepared for this. That £400 payment, that is not coming back. There is some other support coming, which I'll come to in a second. But that £400 that everybody got, that is not coming along at all. Now, you might be thinking, well, what's the point of this then? Well, energy prices are actually predicted in April to go up to £3,700. So on average, again, really important to reiterate this every time. So we are actually getting, saving some money. Whereas if it had the old system of just a price cap, we would be paying a lot more a year. But we already are paying a huge amount more. It just would have been even worse. Okay, so everyone's going to get some kind of saving on average, depending on their usage, because of this price guarantee starting for a year from April at that sort of £3,000 average figure. So what's the other support that's coming along, this kind of cost of living support? Well, this is actually going to be very similar to those other measures announced in the summer. So you got no £400 payment or similar payment that everyone gets, regardless of whether you've got one house or two houses or whatever it is. That isn't coming back. This is going to be targeted. And there is going to be a £900 payment for people on certain benefits, universal credit, working tax credit, things like that. You maybe, if you already get this, you would have got a £650 payment. It's split in two so far this year already. That obviously, same sort of thing, same criteria. It looks like £900. Don't know yet if it'd be a one-off, you'll get it all at once, or whether it will be spread out. Maybe 3 payments, 4 payments, who knows? We'll find that information out. But there'll be £900 coming to people who, again, on those really low benefits. There will also be, again, at the same rate as before, a £300 payment for people who are on the state pension age and a £150 payment for people with certain disability benefits. So those figures are the same as before. You'll get those again. These aren't the same ones. These are extra payments that come along. That broadly is all we're going to get in terms of energy. There is also the doubling. If you get, you use like oil for heating your home or LPG, that gas again in your home. You don't get the conventional electricity or gas things. There's £100 payment you'll get. That's going to be doubled to £200. So you'll get a little bit more. But otherwise, you're going to have to find extra cash to cover these costs. The next big change to tell you about comes down to tax. And I'll start with one that's probably not going to relate to most of you, but it's the big one. And then we'll come back to the rest of us in a minute. This is around the additional rate of tax. Now, you might remember, if you watch my videos regularly or just followed it in the news, that one of the key announcements made by Truss and Quidco was the abolition of the additional rate of tax. This is where earners, people who earn more than £150,000 a year, will be subject to 45 pence per pound taxation on earnings above that amount. So below that, they'd be paying 40% or 20%. It's all tiered going up. But that was that's what the 45% rate was, over 150k. And Truss and Quidco abolished that. They said it's going to go completely from April. So everyone would just be paying higher rate. There would be no top tax for the super rich. That got reversed in the U-turns. Again, a lot of all those policies we know got scrapped or U-turned, whatever. But what's happened now, and this is amazing, you think where we're going, that just a few months ago, it wasn't going to exist at all. Now, the threshold where you have to pay that 45% rate, that additional rate of tax, has been lowered. So more people will be paying it. So from April the 6th, 2023, that will drop that threshold from £150,000 to £125,140. Why they couldn't make it a round number, I don't know. But anyway, that's where we are. So if you are currently earning between 125,140 and 150k, you're suddenly going to start paying that 45% rate on that number in between that amount, okay? If you're already earning more than 150k, then suddenly you'll start paying it on your earnings below that as well, that 25k mat. And that can add up to about £1,250 extra every year for those really high earners. And this is kind of a running theme from the Conservatives today, was that those who earn the most will be paying the most. And this is kind of one of the areas where that will happen. Another kind of knock-on that's worth thinking about here with this, if you are suddenly pushed into this additional rate tax band, you weren't there before, you are going to lose your personal savings allowance. This is rated at £0 a year. This is for anyone in that band. So at the moment, if you earn under 150k, you do get a £500 allowance for a higher rate taxpayer, but the additional rate payers get zero. This is how much interest you can earn in a year without paying tax. So it's worth thinking about that. Potentially looking at the money you have held outside of ISAs. That can make a big difference there, because suddenly you'll be paying 45% tax on all of your interest, okay? Because you have no allowance, any interest you earn, 45% tax. That can make a big, big difference. Cash ISAs obviously could protect that for you, or premium bonds as well. Now, for the rest of us, most of us, the majority of us who do not earn more than 125k, there are also going to be some tax cuts, but they're kind of cheeky tax cuts, ones that you won't necessarily notice. It's not like straight away you can say, look, oh, we're increasing how much you pay. What they're actually doing instead is keeping the thresholds where they are. So for the moment, if you earn more than £12,570, you are a basic rate taxpayer. You pay 20% tax on your earnings between that and the next threshold, which is £50,270. Above that, and to the additional rate, you pay 40%. Now, normally when these things come around, those rates, those thresholds increase with inflation, give or take. And that effectively means that if you get a pay rise with inflation, you aren't really losing out at all. You're staying within that band you're in right now. Obviously, if you get a promotion or whatever that moves you into a different band, that's different. But a general inflation pay rise wouldn't impact you. Now, these thresholds we already knew were frozen. They were frozen last year for 2 years, okay? So we knew until 2024 they were going to stay where they were. What's happened now is they're going to stay frozen at these same thresholds for even longer, until 2028. And you might think, well, what difference does that make? Well, now, if you're getting a pay rise, and let's say it is with inflation, you're getting more money. The tax rate staying there. Let's say the following year, you also get an inflation rate tax wage increase. It goes to there. But the threshold hasn't moved. But the following year, your next one takes you to here. and you're above that rate. So rather than this moving up with it all in one, you're going bang, 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 boom, suddenly you're in that higher threshold. So you will be paying more tax. And similarly, it relates for national insurance threshold. That's also been frozen as well. So again, if you don't get a pay rise, it won't make a difference. But when you do, keep an eye out for this, because if you move into those thresholds, you will be paying more tax. Now that's kind of income tax. There are other tax increases worth talking about. One of them is likely to be around council tax. Normally, if a council wants to increase how much it charges you by more than 3%, it has to do a referendum and voters have to agree that this is justifiable increase. The threshold for that has increased. So from next April, when we see those increases in March, April time, councils can just increase by up to 5%. There's a 3% rate plus 2% if they pay for social care. So I would expect to see council tax to go up by more than normal for most areas. Keep an eye on that when that bill comes around in the spring. You're likely to see a hefty increase going on there, or at least a larger increase than you would have been percentage-wise in previous years. Stamp duty. If you are someone who is looking to move house, you probably thought, oh, great, we had those changes in that mini budget again. It's rearing its head again, where a lot of those thresholds were changed, particularly for first-time buyers, when you actually would have to start paying this. Those are going to stay in place, but rather than be permanent, they're only going to be there until the 31st of March 2025. After that, they revert back to the thresholds we saw before. Now, of course, that may well change. They may increase with inflation, or who knows, there might be a complete revamp of stamp duty. We don't know. But just so you know, this is now a temporary measure rather than a permanent measure. The next one to tell you about are dividend and capital gains taxes, and particularly the tax-free allowances that you get with these. Now, most of us, if we are going to come in contact with these allowances and these taxes ever, it's going to be through investments. So dividends sometimes come through certain investments we might have, and capital gains is generally paid on any gains we get on any of these kind of generally stocks and shares investments held outside of an ISA. You may also be subject to these taxes and these allowances through other things. Maybe you're a buy-to-let owner and you sell or have a second home and you sell that second home, or other kind of assets that you might have accumulated or invested in. Or maybe you are running your own business, in which case you may well pay yourself in dividends. So the allowances you get where tax isn't due are being drastically cut. So dividend tax, right now that is £2,000. That is going to change next April 2023 in half to £1,000, and the following April down to £500. The capital gains tax, that is currently £12,300 a year. That will half to £6,000 in April, and the following year half again to £3,000. So quite massive cuts in how much you can get tax-free in these areas. And this is again going back to this idea that people who are making the most, who have the most, will be paying more of their share. That's the rhetoric, whether it's true or not, that's the rhetoric that has come from the government. So what do you do here? Well, potentially you want to really maximize making sure that if you have any of your ISA allowance that isn't used for investments or cash savings, that you do maximize that. It's up to £20,000 every year you can put in there. I know for a lot of people that's impossible, but if you're impacted by these things, then actually that's something you'd probably be able to fill. So have a look at those, making sure you're taking full advantage of that. And again, this isn't my area of expertise. It's not something I talk about a lot, but you might want to be researching if you have other assets which would be subject to capital gains tax, looking at whether you might want to dispose of those, to sell those now in the next 3 or 4 months in order to take advantage of that higher allowance on capital gains tax. So again, one to think about for some of you, not for a lot of you, but for some of you that's going to be important. Quickly, some other tax things worth just mentioning to you. Inheritance tax, the threshold for that has been frozen as well. Already was frozen. That's now going to be extended when how long that's frozen for. Although in reality, very, very, very few people actually end up paying inheritance tax. So it's not going to impact many people, only a handful, I would imagine. Electric vehicles, these are going to be taxed from 2025. Both new vehicles and older vehicles as well. So if you have an electric vehicle, you're thinking of getting one, just bear in mind there's going to be that additional cost coming in. Not a huge amount. I think it's going to be the standard rate is currently £165 a year, but again, an extra cost that's coming into play. What we didn't see when it came to tax was anything around pensions and the pension tax relief and things like that. So it's potentially good news for people, but again, doesn't mean it won't happen. It just means it's not happening right now. Now, the only other things to tell you about a note here do relate, and I think it's quite important here, relate to kind of benefits and wages. If you are someone who currently gets the state pension, or you get universal credit or other benefits, you may have been worried to find out exactly how much they are going to increase in April. And there's been a lot of speculation about they wouldn't go up with the rates of inflation. with maybe a much lower rate, and that's obviously going to be real terms cut, very difficult for people who probably need it the most. Well, the good news is it will go up by September's rate of inflation of 10.1%. So that's how much extra you will get from April 2023 onwards. The benefits cap, that's also increasing by the same amount, 10.1%. So this is good news for people who are really probably at the lowest end, combined with what those extra payments they might be able to get in the cost of living payments mentioned before. And if you are someone who is working, but working on the national living wage, again, not a true living wage, that's much higher, but that is going to increase as well. So if you're over 23 years old, that will increase from £9.50 an hour to £10.42. If you're a full-time worker on the living wage, that means an extra £1,600 a year. So there you go. What do you think of this autumn statement? Let me know in the comments below if you think it's good or bad. Are you going to be benefiting from this, or are you actually going to be penalised quite heavily? I'd love to know. My name's Andy Webb. Thank you so much for watching. Check out these videos for more on your money.